And last, but certainly not least, we come to budgeting. This is probably the topic that will be the most useful in your personal life, as you can easily use it next year when you go study and have to fend for yourself. Budgeting is part of the planning for any business, or it certainly should be. It helps to predict what the future situation will be. Now, obviously, we don't have a crystal ball. We can't say it will be exactly that, but we can make educated guesses. And laying it out carefully will help us to identify what the future problems might be and then make plans to avoid them. A cash budget, which is what we'll look at first, predicts the cash flow. In other words, how you think money is going to move in and out of your business. When you're preparing a cash budget, be sure to use only the cash or bank figures. Don't use any figures of actual credit sales or credit purchases, etc. Instead, you want to look at how much do you expect to actually receive from your debtors and how much will you pay to your creditors. And to do that, we'll create a collection schedule or a payments schedule. The concept is exactly the same for both. A projected statement of income predicts the projected profit that you expect to get. Now, for this one, unlike the cash budget, you have to take accruals into account, but you will only use incomes and expenses. So you won't have assets and liabilities showing in the projected statement of income. It looks exactly like a normal statement of income, except for the date at the top, of course, is in the future. Similarly, you can also create a projected statement of financial position, because if you've got your cash budget, you've got your statement of income as predicted for the future, you can easily see where you think your assets and liabilities will be. And you can then try and see what your financial position will be. A debtors collection schedule can be drawn up like this. The first thing you do is you enter all of your credit sales, and then you enter all the other information to predict the cash flows. So you can see in this first column, I've shown the credit sales for each month. If you know the actual amounts already, then that's great, you can put them in. But obviously, when you're working quite a few months in advance, those figures will need to be budgeted because you don't already know what they actually are. Your budget months are then the columns that you'll use. And you simply say, for example, what if I'm looking at month 1, what were the actual credit sales in month 1 times the percentage that I expect to receive in month 3. Sometimes you might need to take discounts into account. So, for example, in month 3, how much is going to come in month 3? If you offer a discount, you would need to subtract the discount because obviously you won't receive the discount in cash. And the easiest way to do that is if, for example, it's a 2% discount, you just say times 98%. It's a nice little shortcut that you can use to subtract a percentage. Similarly, if, for example, your credit sales for month 1 are taking or you expect them to take a very long time to come in, some of them, and then you expect to charge interest, then perhaps month 3's entries might need to have interest added on. And let's say you were going to add on 5%, then you would just say 105%. Obviously, that would be very, very high if you were doing it for a month. In reality, you'd probably charge maybe 12% a year, so you'd probably add on 1% each month. Always look very carefully at interest, whether it's per month or per year. Bad debts are not shown here in the collection schedule because obviously you're not going to receive the money, but it sometimes helps to make a little note that this is where they would be, because if you're doing a statement of income, you will need to show the bad debts along with the discount that you might have been granted your customers or any interest that you might have charged. You'll then total everything up, and these totals at the bottom are the amounts that you will show in your actual cash budget. You can draw up a creditor's payment schedule in exactly the same way. The only difference is instead of credit sales, you'll use credit purchases, and you might need to first derive that from sales and then use the markup to get cost of sales, and then calculate the percent that might be on credit. I would probably add in a couple of columns over here, might make it easier, but sometimes they'll give you a layout where they actually show it as rows. Just follow the table and do what they ask. You can see over here, this is where your total receipts would come into your cash budget. The basic layout of a cash budget is really simple because it's literally cash receipts minus cash payments to give you your overall surplus or shortfall. You then combine that with what your beginning balance was in bank, and you should then be able to get what the bank balance will predictably be at the end. Of course, you don't know. A projected statement of income, you will only use your incomes and expenses as mentioned, but notice again, we're predicting future net profit, not the past. When you're answering questions, again, keep in mind, you want to only talk about the future. So talk future tense, not past tense. As mentioned, you can create a statement of financial position, and you can analyze all of these using your normal analysis ratios. You do it in exactly the same way, but obviously your comments would be, it is predicted that, or it will be, or likely to be is probably a safer way of saying it. When you don't like the answers, you can then go and fix it by taking remedial action to try to adjust whatever the results would actually be. Keep in mind that the whole purpose of drawing up a budget isn't just to keep you busy and out of mischief. It's so that you can try to control your actual spending and your cash flow. So although you'll draw it up at the beginning of a period, it's very important to afterwards go back and compare. What did we budget and what did we actually spend? Because those differences can be very telling. You need to identify those differences and why they existed, what caused them. And then you've got two ways of reacting. The first is obviously adjust your behavior or your spending to suit your budget. For example, if you are studying next year and you can't understand why your groceries bill is too expensive, maybe you discover you're spending too much on chocolate. Obviously, buy less chocolate. That's not important. Well, it really is, but not in the context of your budget. However, if your budget is unrealistic, and it's unrealistic not because you're eating too much chocolate, but because you forgot to budget for deodorant, you need to buy deodorant. So in that case, adjust the budget to take into account anything that you might have forgotten. When you're writing your answers, keep in mind that you need to be creative. These questions are usually used for part of the problem solving. You want to use your knowledge of budgeting, but you also want to use a lot of common sense to try to find solutions and be creative. It's usually in a paper two, simply because it's allowing you time to think. So use that time to think and make sure that you relate your answers to the scenario that's given. What kind of business is it? What is the product, etc. Any information that they've given, use quote. And your budget phraseology that you're going to use needs to be in the future tense if you are creating a budget or projected statement of income. It can only be in the past tense if you're using it for control and comparing it to actual figures.